Once again, good morning, guys. Welcome to the session of Expert Talk on Entrepreneurship Opportunities in FinTech, organized by Nirman, the pre incubator at IIT Madras. I'd like to extend a special welcome to our esteemed speakers who have made a mark in FinTech and are here to share their valuable experience and insights. Nirman at IIT Madras is committed to engaging entrepreneurship and supporting the entrepreneur dreams of its students. Nirman provides a sandbox space where students team work on and give shape to their businesses, ideas without the risk of failing hard. So coming back to what Nirman is. Nirman provides a sandbox space where students team work on and give shape to their business ideas without the risk of failing hard. It provides mentorship, training, funding, and networking opportunities to student startup as they embark on their entrepreneurial journey. Nirman provides all the guidance and support to ensure budding entrepreneurs move steadily forward, setting up successful enterprises. Nirman is generally a startup of startups, continuing its tradition of acquainting students with startup opportunities in an ever changing and evolving environment. Nirman brings you to four experts: Mr. Arjun, Ms. Natasha, Mr. Pradeep Kumar, and Mr. Sharath Chandra, each a legend in the space, to talk about the opportunities that exist in fintech sector for young and aspiring entrepreneurs on campus. Now, I request Tarun from Nirman team to welcome Mr. Arjun, a proud alumnus of our institute, on stage. Now, I'll request Chandan, our PM coordinator, to welcome Ms. Natasha on stage. Once again, welcome, ma'am, and it's a pleasure to have you. Now, I will request Yuraj, our PM coordinator, to welcome Mr. Pradeep to the stage. Sir, thank you for joining us. I request Richa Agarwal, madam, Nirman's faculty advisor, to join our speakers on the stage. Thank you so much for taking time for us from your busy schedule and joining us today. Your presence and your work shall genuinely inspire our students. Without further delay, I'd like to introduce our first expert, Mr. Arjun, a role model and an inspirational figure to all the entrepreneurs among us. Mr. Arjun is the founder and managing director of GrowXCD, which provides a complete solution that enables business to become virtual enterprises through pristine service and self-contained software. He is the director of Paripurna Software and a mentor at the IITM Incubation Cell. Sir previously has been the managing director of IDFC First Bank Limited, which was formed by acquisition of Grama Vidyal Microfinance Private Limited, where Sir has also served as the CEO. Mr. Arjun is an IIT Madras and Harvard Kennedy School alumni and a prodigy with years of experience, leading multiple teams and projects across the entire spectrum, which includes rural retail lending, deal origination and structuring, and post-deal integration. I request Sir to come to the dais and share his thoughts for today's session.
Good morning, everyone. Thank you so much for this opportunity. I want to thank the Nirman team first for giving me the opportunity to be here. I think obviously a great pleasure to be back here. So I used to be BTech Chemical from the pass out of 2000. So nice to be back here after 22 years and speaking to all of you about my journey and my thoughts and insights about what entrepreneurship in fintech is about. So I'd like to the topic that was told to me about is entrepreneurship opportunities in fintech. Right. So I'd like to start off by talking a little bit about entrepreneurship itself. Right. I think it's very interesting to be an entrepreneur or to say that you want to be an entrepreneur. I think it's important to understand what entrepreneurship is about. Right. And once you get an understanding of it, then we can get into what entrepreneurship opportunities in fintech are. So can I use this? Let me talk about what I'm trying to say here. So entrepreneurship is about taking any problem and solving it. Okay, that's really what entrepreneurship is about. It can be existing technology, it can be old technology, it can be whatever it is. So you're taking any problem and then solving it in a slightly different manner. So to give you an example, we have different technologies that I just listed, or technology systems which have been created. Let's talk about some of these technologies. Let's say, for example, GPS. Do you know which year GPS was actually created or introduced? Anybody has an idea? Which year was GPS created? It was started in 1970s. Okay. It was started in 1970s and its major use was during the Gulf War in 1990s. So it was really not something that was designed or created for our mobile phone. It was created for some other purpose, right? And then you have all these creations of large, open API infrastructures, which are more new. Again, Google Maps was launched in the year 2005. So it was launched way before all of us can even imagine the various uses that we have of it, right? The smartphone again has had its evolution, and it was not created specifically for all the purposes that we can think of right now, right? Payment solutions, and payment solutions like Visa or IMPS or NEFT, RTGS, all of these again were created way before for completely different purposes, right? All of these things, when people put it together and then solve an existing problem, we get what we all are very commonly know. So you get an Uber if you put all of these things together, right? You take different technologies and then you solve a different problem, you get an Uber. And then you get an Amazon, right? You get these kind of companies coming out when you use different technologies. It might seem very obvious now to us, but if you go back, 20 years back, and then you're sitting there and looking at all the different technologies, it might sound like a science fiction to do this, right? But then somebody actually went out and did it. Now, I want to talk a little bit about what I put in the bottom of this slide, which is basically innovation, differentiation, and record, right? So there is, while you create different problems, different solutions. This is what is known as innovation, right? Where you take different technologies which are not necessarily combined together to create a new solution, right? That's where the innovation actually happens. But then that is one step. That's really the big bang. And then there are multiple differentiators that keep coming in. I'm sure a lot of you would be aware of things like eBay, right? eBay and Amazon technically are very similar, but their differentiation is one is an auction site, one is a marketplace. And then some people basically have only if you look at a Walmart, then they have their own store online. They're not trying to do third-party sellers. So you have what is known as differentiation that comes in, right? And then you have record, which is basically meaning that two solutions are exactly the same, Ola and Uber, but you like one versus the other because of the quality of service, the operational excellence. You can have entrepreneurship at each and every all of these levels, right? So you're not talking about solution only at the innovation level. We all start thinking about innovation level. There's solutions that are happening at a differentiation level. There's also solutions that's happening at a record level, right? So this is really what entrepreneurship, in my understanding of all these years, is that you need to take problems, solve it. You might be creating an innovative solution. You might be creating a differentiating solution using a different business plan, business model, whichever way it is. Or you might be doing the same thing, but far more efficiently as others. So obviously the value that you create, changes accordingly, right? So now getting on to the second, entrepreneurship in FinTech. What is FinTech, right? I mean, to me, that's a big question, right? FinTech is really very large these days. This is just one of these slides from what is known as the Digital Fifth, one company which puts out these slides. This is the one for the for the payment infrastructure. Similarly, you have something where you have something for the loan infrastructure. I'm sorry, yeah, for the lending infrastructure. So you can see it. There's so many different versions of it. Now you just circle back to what we talked about. What is entrepreneurship? What are they trying to do here? They're all taking different problems. Somebody is taking a buy now pay later problem. Somebody is taking a salary loan problem. Somebody is taking a automotive finance problem. Somebody is taking a P2P lending. Each of these things are taking different problems and solving it in a differentiated manner and trying to create a solution which we are trying to do. Okay, so if you can just put that around your head, then you'll understand that FinTech is about taking existing tools and techniques, put them to the regular problems and solving it in a different way, right? So before we go on, what exactly is the whole game of finance, right? It sounds very, big and complicated. I just want to break it down into just, simple three things. You only do three things with money, right? You either hold your money. When you hold your money, you can either put it in your savings bank account, or you can put it in your, investments or somewhere where it's going to give you a return back, right? Or you can lend this money to somebody else, or you can, transfer this money from person A to person B. This is literally all the transactions that we're talking about. And who does these transactions? So you have banking, where banks basically give you a savings or a fixed deposit or a savings option, right? Then you have wealth and brokerage, which basically is where you can do investments and buy stocks and this thing. Can you probably do it? Yeah. Then you have insurance, then you have lending, then you have payments and transactions. So you have all these different options which are there. These are the different financial services that exist, right? And for each of these financial services, for somebody to do a transaction, you need to know the following things, right? You need to know what is known as you need to be able to identify the person, right? And you need to be able to get the consent of the person. So if you go to a bank, they need to know whether you are coming, whether you have authorized that you want to take this money out, whether and you need to give out your your pay-in slip or a cash out slip, and you have to give your data submission, right? And then you basically have can you just go on to the next? Then the decision is being made. Somebody at the back end looks at your signature, confirms whether this signature is matching with the signature of the person in the account, and give the money out, and then the cash is being transferred. So for any transaction, whether it is a loan, lending, or transfer of money, the same set of activities have to keep happening, right? So this is primarily what any financial transaction is going to entail. So if you look at what does identity or KYC do, they basically confirm that you are the person who's coming and asking it. They confirm your presence, right? If you look at what an approval or consent is doing, is they can take your consent. Your signature is considered to be unique, so they take your consent that you want to withdraw this money, you want to deposit this money, you want to buy this insurance, you want to do these things, right? And then based on that, you take a decisioning making. Yes, can I do this transaction? Not do this transaction? Can this be done? Not. And then you finally have the actual transaction happen, right? Most of what fintech is can be broken down into very simple. This is really what it is, right? And we have to, using first principles, really build it back from the basics and understand how do I solve each problem. So if we go on to the next slide, please. You look at what has happened in this whole fintech world today in India. They've actually done a lot of work on each of these layers, right? They removed the entire presence, made it presence-less, right? You can show your Aadhaar card, you can give your Aadhaar number by this thing, and then your OTP comes to your mobile number, you get authenticated, right? So you get Aadhaar card and mobile Aadhaar, which is solving this, right? Then you have paperless, you have an Aadhaar eKYC, you have an e-sign. You don't even have to be physically present to do all these transactions. You can do it completely paperless. You can do this whole thing cashless, which is what everyone knows. You can do UPA, GPay in this thing. You can have the cash getting removed out of this whole transaction. Consent. This is a new thing which is actually coming up. This is a consent architecture which is getting created right now in our I would say fintech stack, which is a very big thing actually. So this layer is a new thing which has got created recently, and that's going to again create a big impact for us. So I hope all of us are with us, and let's move on to the next slide. So I just want to tell you that I have in my experience has been completely into lending. So I'm not an expert at transactions or any of these things. But if you take I just want to tell you what are the opportunities that are there, what is the innovation that have happened with lending, right? So imagine somebody who's there in the who's having a idli shop, or some roadside vendor who's having her shop, and she wants a loan. Typically, these kind of loans today are usurious rates, right? Somebody will give you 100 rupees in the morning, you have to give them back 110 rupees in the evening. If you guys do the math, it will work out some astronomical, IRR rates, right? So the idea is, how do you solve somebody's problem like this using all the technologies that are there, right? And today, this is now being made possible. It's being made possible by all the technologies that are there. What does this person want? She wants to be able to, she wants a loan. She will basically, share data. She'll see the offer. She'll accept the best deal, receive a loan, get paid digitally, and she'll repay the loan. Right? That's really what needs to happen. But these to actually learn more about this, you guys should follow what is known as iSpirit. That's the think tank which actually produces these many of these wonderful solutions that we are finally seeing. That's really a place where I would really recommend all of you to learn about a fintech and learn about what is happening in this space. Do visit the iSpirit team's website, follow their YouTube videos, etc. So this is also from one of their this thing. So and for each of these things, what are the solutions? What does she use? She uses a credit marketplace app. She uses a paperless this thing. She uses a payment app to do all her transactions. And at the what is behind the scene for each of these things? For behind the scene for the when she wants a loan, she Aadhaar or eKYC is a stack that is coming in, right? If she wants to share data, she can do it through a DigiLocker or authorization, which is now going to become a huge thing as we go forward, right? API offers for loans. There are so many people can give their loan details through APIs. Now there's a new framework called OCEN, which is coming up, which is again a huge area for innovation for entrepreneurs if they're interested, right? Can just go back. So you have UPI, and all of these are the stacks that are actually working at the back end, right? So these are all the solutions that are available. So I just want to leave a few thoughts with you in terms of what can I do? If you guys are really thinking about I want to, if you want to work in the space of lending in fintech, right? Fintech is again too broad. So I'd like to break it down into, I am giving you a solution for the lending space alone, right? If you want to work on the lending space, I'm just giving you a few thought process in terms of how do you approach this problem, right? The typical lending happens, where you have end-use control, in some cases where you don't have end-use control, right? If you want to become a lender, you want to know, hey, I'm giving you money. What are you going to use it for? In many cases, the end use is controlled. Can anybody name a solution where the end use is controlled? So, for example, if you buy a two-wheeler, who gets paid? How many of you taken a two-wheeler loan here, or the family has taken a two-wheeler loan? Who gets paid? Do you get paid? The company gets paid, right? So the end use gets controlled there. So you don't get to decide what to do with the money. You only get to repay the money, right? So if you second is restrict. So the first type is where it's a personal loan, right? So you just give you the money, you pay it back. Second is a restricted end use, right? But I know what you're going to use it for. A housing loan. You can't go out and put it in stocks and this thing. You have to use it for buying a house, right? But I don't have any control over your cash flows. The third type is actually a very interesting type, right? These are all new things which are innovations that are coming out. So when you again go back to thinking, hey, how can I innovate on some of these things, differentiate on these things? Imagine, suppose you have data from Zomato about all the orders that a person is basically, a hotel is basically getting, and that this guy is a good guy, he gets a lot of orders, so I can comfortably give him some money, right? So that's where you have visibility to the incoming cash flow, but you don't really have control over it, right? And the fourth type is where you partner with Zomato and say that hey, if you are getting, I'm going to give him a loan, and whenever he gets an order, take 50 rupees from his order and give it to me for my repayment, right? And these kind of models are still not very popular yet, or it's still not evolved yet. And these are going to be some very innovative models which are going to get created in this fintech space for lending, right? So this is something I want to leave as a thought with you in terms of what are the opportunities that you have for, let's say, a fintech based lending, right? So this is really my thoughts or points on what are the opportunities for entrepreneurship in the fintech space, right? So I want to leave some thoughts with you saying that how do we link collections to to the repayment or the cash flows of the particular person, right? So if you have a person who's running a business, can his customers' cash flow be used for collections? This is like the golden rule, like the gold standard of lending, right? I don't have to do anything. Money will come back to me from whenever he gets money, I get money, right? Can I do that? Today, we have all the tools available for it, but this is still not picked up. It's a beautiful opportunity for entrepreneurship, right? Second is, we have more and more data about a person. How do I use more derived data sources for deciding, taking decisions, right? It can be any kind of decisions. And there's so many consent-based architectures which are coming up right now. So it's going to become more and more legitimate. There's no more, hey, you install an app and then it takes everything from your app, and you don't know what it has and what it doesn't have. It will see your SMS, it will see your WhatsApp, it will see your Facebook, this, that. That is actually going out. You can legitimately use data from a customer and take decisions. Again, a big area, right? And last, you can this whole concept of unsecured versus secured loans. Everybody in fintech is focusing on unsecured loans. Why? It's easy, right? But the secured loans are actually the more difficult ones, right? How do you solve that problem? How do you create solutions around for the secured loan piece, right? So incidentally, these are all things that I'm also working on right now in terms of trying to solve it. So that's I'm working on a GrowXCD, which is basically focusing on the secured loan piece, and we are looking at different solutions for payment based collections. So these are some of the problems that I am working on, and I'll be very happy to chat up if any of you have any questions further on this. Be happy to chat up. My email ID is also there in case you want to drop in a line. Please do. Yeah. Thank you so much, guys. Thank you.
Thanks a lot, sir, for this learning experience. The different perspective towards the word entrepreneurship broke the complex word into something simple. The fintech space was simplified into fundamental concept, which I guess has led to a better understanding of the technology stack. Thank you once again, sir. I'm sure the audience would have also enjoyed your session equally. Now, I would like to brief you about our next expert of the day, Mr. Sharath Chandra, who has joined us online. Mr. Sharath is the co-founder of India Blockchain Forum, which has a broader mission of making India a blockchain powerhouse. He is currently the Vice President, Research Strategy for EarthID and advisor of GMR Innovex. Mr. Sharath is a mentor for RISE, the home of fintech created by Barclay, and also for MIT Center for Future Skills Excellence. We genuinely believe that our youth has much to learn from him, and we hope we all can excel together under his tutelage. He has experience working in senior positions with MNCs such as Apple, American Express, G Capital, Polaris, Cognizant, and many more. He is currently volunteering as a chairperson of the blockchain working group at IET India's Future Tech panel. Mr. Sharath has also served as the president of Government Blockchain Association. In addition to all the knowledge and experience, he is also a prolific writer and has authored several blogs for the Economic Times. It is truly an honor to have you with us, sir. I request that sir share his thoughts for today's session.
Thanks for the kind introduction. Good morning, everyone. And I would like to thank IIT Madras for giving me this opportunity to share my views on Web3 and the future of fintech. So it was a very interesting session by Mr. Arjun, where he talked about some areas of lending. And if I can quote the recent statement by Chief Economic Advisor, Mr. Nageshwaran, he said that India is going to be the fastest growing fintech, and by 2030, the market will grow up to 1 trillion. And this momentum will be driven by account aggregator, OCEN, Open Credit Enablement Network, and UPI, right? And these are some of the points which even Arjun also touched upon. Now, how Web3 or the new iteration or new version of internet is going to disrupt finance, or how it is going to make lending more accessible, because lending was one of the key points which Mr. Arjun was also speaking about, how we can enhance access to financial services, especially lending, because despite the success of Jan Trinity, right, Jandhan account and Jandhan, Aadhaar and mobile, there's a significant section of population which do not have access to financial services. Now, if I can put this in context of MSME lending, right, or MSME financing, there's a significant gap of 16 lakh crores. how a smart contract-based lending or decentralized finance, or let's say Web3-based finance, can really come in and make a difference. So that's where one of the projects by iSpirit, which even Mr. Arjun was talking about, it's called Project Sakhi, where it was tried out last year that MSMEs can tap into DeFi or decentralized finance lending pools and get better line of credit as compared to traditional financial solutions. Now, let me go back to one of the popular quotes by Bill Gates. He said that banking is necessary, banks are not. So if I can paraphrase that in the context of financial services, I can say that financial services are necessary, but financial intermediaries are not. So what do I mean by that is we can't wish away the financial intermediaries, banks, but again, they need to move towards, or they need to embrace decentralization or Web3 native approach where the user, people like you and me, we have complete control over our own data, right? And we can engage in a more seamless way of consent-based data sharing. So we already have account aggregator, which Mr. Arjun also talked about, again, put forward by the iSpirit or Product Mission team in Bangalore. So we have account aggregator, but again, if you want to look at a completely new world where we're looking into new streams of commerce in Web3 space, right? So you need to have a wallet, a Web3 wallet to be precise, which is more like a composite wallet where I can make payments in the physical space, the way we do payments using Paytm or PhonePe or Razorpay. Can I use the same wallet for making payments in the virtual world? Can I use the same wallet to make payments in the metaverse? So that's where Web3 native technologies or Web3 wallets are really helpful. So let me expand upon for benefit of students or members from the audience who are not new to this idea of Web3. So Web3 is the new version of internet. So if you look at the history of internet itself, I mean, it started as early as 1980s by Tim Berners-Lee. Then came the era of big techs, which led to monopolization of the internet. And then I think 5 years later, in 2014, Ethereum's co-founder called Gavin Wood, right? He proposed the idea of Web3 or the new version of internet where users like you and me will have complete control of our own data. So it's primarily focused on self-sovereignty. So I will have complete control over my identity, and I will have complete control over how I choose to engage with trusted third parties and get rewarded in return. So that's why there are three important differentiations. The first version of the internet was read-only web, second was read and write, and third was read, write, and read. So whatever activity I'm doing in this new space of internet, I'll be able to own that piece of information. I will not be deplatformed by the so-called big techs, right? Now, if you look at some of these recent developments where Twitter was acquired, one of the major reasons why Elon Musk acquired Twitter was he wanted to put forward the idea of a super app called X. So, and at the heart of super X is a Web3 wallet. Because look at the distribution Twitter commands, right? So they can easily cut out intermediaries and make wallet-to-wallet payments, seamless, instantaneous, real-time, right? Because the existing banking channels, they have limitations with respect to time zones, with respect to working hours. But let's say if Twitter comes out with a Web3 wallet, which they are obviously planning to, there are reports that they have kind of shelved that plan, but in the process of coming out with a Web3 wallet where Twitter users will be able to not only monetize the content which they create, own it, and also engage in other forms of commerce, be it in the online space or be it in the physical world. So that's a new, also that's a very significant paradigm, and it can also lead to new forms of lending. What do I mean by new forms of lending? Let's say if I'm a content creator on Twitter, right? And every month I get, let's say, $300 worth of income, right? So depending upon my cash flow of $300 per month, a DeFi lender or a decentralized finance lender can extend me a line of credit. So this has a parallel in the world of physical world where we have something called revenue-based financing, where let's say if I have a business and I want to seek loan from NBFC, right? Depending upon my cash flows, depending upon my GST data or receivables, they can extend me a line of credit. So a similar parallel or similar example is happening in the decentralized finance. Well, Twitter again can take that leap of faith and make sure that DeFi lending is more accessible. So now coming back to what are the opportunities for entrepreneurs or opportunities for technologists. So there is a lot of friction when it comes to on the next set of users on Web3. So not everyone is well versed about how they can take care of assets in this new form of wallet, right? So how can you create a wallet which is very easy to use? Anyone who doesn't have maybe the high level of know-how can use it, right? So easy to understand, easy to use, and secure to use as well, right? So that's one opportunity where I think many startups can come in and start creating solutions which will help businesses, enterprises, financial intermediaries onboard the next set of or the next billion users. So what's happening globally is there's a foundation called Open Wallet Foundation. It comes under the purview of the Linux Foundation. So they're working towards how they can make uh, wallets or privacy preserving open wallets accessible to everyone. So they're creating something like an open source stack, the way we have India stack. So a step has already been taken in that direction, right? And Mr. Pramod Verma from the Aadhaar team or the Digital India team is also associated in some sense or the other. And their companies like Accenture, Okta, they're also involved. So they're focusing on three major areas. One is how they can use this open wallet to allow people across geographies to assert their identity and make payments. So payments and identity, they are going to be linked. So again, this Open Wallet Foundation will be launched somewhere in November. I hope this will be launched somewhere by end of November. So once that is launched, you already have a open source stack where you can create an open wallet or a Web3 wallet. Now, it depends how you want to customize it, how you want to bring in the right user experience so that uh, people start adopting these wallets as compared to the digital wallets which we already use. So if you look at the expansion or the proliferation of digital wallets, right? So digital wallets, they have already made banking invisible. What do I mean by that is, I mean, we hardly go to banks. And people or the digital native users or digital native consumers, they hardly go to a bank unless and until you are executing a high value transaction or taking a high value loan, right? You don't need to go to a bank. You can use or you can access all the banking services through a wallet. Now, the same thing is going to happen in this new form of internet or the new form of economy called Web3 economy. So that's my limited submission for today. I'll be happy to answer any questions if students have any. Thank you.
Good morning, sir. It was short and crisp thing where you talked about Web 3.0 and open wallet technology. So what I wanted to ask is, like, if you see Indian economy from the start with the lending, with the financial institutes and FinTech things, MSMEs are performing very better, and you are making the supply chain more efficient. If you take the supply chain, like if you take the supply chain of any company, how do you see, like, how do the banking system see FinTech? Like, do they see FinTech as a threat to them, or banking system has so many customers and it can get the deposits? But whereas if you see on the other side, FinTech has so much of data, where the previous speaker was speaking about unsecured loans, because they have so much of data of small vendors, small dealers. So, like, do you see both the systems merging together and creating a new system altogether, or you see both the systems as a threat to each other?
I would like to say that banks, they are at the constant risk of disruption by fintechs. So there is some element of threat, but even banks have realized that they need to coexist with fintechs, because the kind of innovation, whatever innovation has happened in the banking space, it has come through fintechs only, right? Even if you look at, I mean, the success of UPI itself can be attributed to the emergence of players like Paytm and PhonePe and Razorpay, right? A banking app would not have made the progress or UPI gone mainstream. So there has to be coexistence and I would say cooperation or collaboration between these two players. So fintechs bring in the right user experience. They bring in the right insight which banks may not be able to tap into, right? And obviously the innovation. That's why all these banking players, they have an innovation vertical where they are open to interacting with, I mean, all the fintechs. So let me also maybe give you another piece of information. The Reserve Bank of India has two innovation hubs, one in Bangalore and one is in Mumbai. So the one in Bangalore and even in the Mumbai one, they are very open to interacting with fintechs who can make banking more efficient, more accessible, and expand the line of credit to people who do not have any, right? So again, both these players, banks bring in the element of cost, fintechs bring in innovation and the right user experience. I hope that answers your question.
Any other question? You have a question here.
Sir, good morning. So my question is, how will blockchain unravel in India? Will it be a new blockchain for India, or will we be using existing global blockchains like Ethereum and Bitcoin?
Okay, now it depends upon what is the sector are we looking at. If you look at banking per se, or let's say, let me go back to the CBDC, right, or the central bank digital currency, or the digital rupee, which RBI announced that the first set of trial has begun on 1st November. So when it comes to dealing with a central bank digital currency, the regulators or the Reserve Bank would choose to create its own stack rather than stick to the RC Corda or the Ethereum of the world, right? Because they want something called vendor neutrality, or when they want to avoid vendor lock-in. So they control the entire stack. So that's one area. Now, when it comes to domains or like supply chain or trade finance, so now there's already RC Corda, one of the leading enterprise blockchain platforms. They have done a significant amount of job. So there's no point any bank reinventing the wheel and creating its own stack, right? So when it comes to matters of national sovereignty, monetary policy, the regulators or the banking regulator will choose to create its own stack, or create or maybe fork one of the existing blockchains. But when it comes to other matters, like for example, trade finance, supply chain, they have existing and proven model which the existing banks can take up, right? And let me give you one more example with respect to Italy, where the Italy Banking Association, close to I think 130 banks are using RC Corda for interbank settlements. Now let's look at interbank settlements in the context of India. So when the RBI governor announced that on 1st of November, the wholesale CBDC will go live, the pilot will go live, they settled close to 275 crores of government bonds, right? So that was more like an interbank settlement. We already have RTGS, IMPS, right, and different levels of settlements, but this new form of settlement, again, blockchain based, will make the banking system more resilient, robust, and complementary, right? Did I answer your question?
Yes, sir. But do you think it will be better to have like a common blockchain for India so that all these transactions happening in India's industry can be brought up in one place?
See, ideally, yes. In fact, one of the key objectives of the forums which I'm part of, India Blockchain Forum, we aspire to create something called an India Blockchain Stack, a completely open source stack where we take the best pieces from all the existing stacks and make it a modular approach where anyone who wants to create or join, they can do that. So ideally, yes. For example, let's say if we have a national blockchain stack, the way China has something called BSN, right? Blockchain Service Network. So, but again, it will take a lot of technical expertise, a lot of investment to create a stack of your own, right? And I'm not sure where this fits into government's overall scheme of or overall priority, right? So one of the best ways would be look at areas where you don't need to actually reinvent the wheel, or even if you have to, you do it for strategic reasons. For example, the central bank digital currency is a great example where RBI should be looking at creating its own stack rather than choosing a private player. But when it comes to other areas, let's say, let me give you an example of, yeah, so this is one area where, let's say, talking about DeFi, right? So recently what happened in Singapore, there's a project called Project Guardian where Monetary Authority of Singapore, the regulator there, DBS Bank and JP Morgan Chase, they executed a trade by tapping into DeFi pools created by Aave. Aave is one of the leading DeFi lending protocols, and they used Polygon for that matter. Right? So it depends entirely upon what is the use case, what are the motivations for, or what are the motivations, or what's the outcome the regulator or the industry players are looking to achieve.
Thank you, sir.
Thank you. Any other question? Anyone?
there are a couple of questions. We'll take perhaps one more in the interest of time. So
Sure.
I saw a hand here. Yes. Somebody here is also asking. Please give the mic.
Sir, this RBI introduced digital rupee, right? It is centralized, right? So nowadays, whatever RBI issuing cash or withdrawing cash from the public or whatever it is doing through the banks as intermediary, like they're disposing cash to the banks and forcing them or whatever they're doing, it is like to train them to lend to the people desired for. Now it is centralized. So what is the role of the intermediate banks there between the RBI and this bank? I mean, what's
Okay.
gonna
Now, right. So see, when it comes to the mass adoption of central bank digital currencies, banks have a bigger role to play. So let's say when RBI launches a retail CBDC, we have something called wholesale CBDC as of now, where RBI is issuing CBDC only to banks, except public sector banks like SBI for that matter. Now, let's say if I want to create an account and have retail CBDC in my account, how do I do that? I need to tap into my existing banking provider, right? Let's say ICICI Bank. So what will happen is, now again, this might sound a bit economics 101. So the central bank digital currency is part of the M0 money supply, or it's a liability of the central bank. The money which you and I put in our bank accounts, they are liability of the commercial bank. If the bank goes rogue or the bank goes bust, your money is gone. You just have protection till 5 lakhs. I think 5 lakhs is the amount for depositors credit guarantee insurance scheme. Now, but let's say if I have CBDC worth 5 lakhs or digital rupee worth 5 lakhs in my account, even if the bank goes rogue or a bank goes bust, there's RBI which will honor my commitment. Right. So there's a fundamental difference between CBDC and the cash deposits or bank deposits which people like you and me keep in our bank accounts. Right. So what it will do is it will also kind of put to some extent bank runs in check. Second, one of the major intent or one of the major drivers of issuing CBDC, as quoted by as stated by the RBI governor, was to make CBDC as accessible or as as similar as cash. So see, this CBDC is going to have the similar anonymity of cash, right? So that people avoid using cash. Only certain sections of the society which are not digital savvy, they can still use cash or even just for smaller value payments. But for significant or I'll say higher value payments, you use either digital payments or a central bank digital currency or a retail central bank digital currency. Why it makes more sense in the current context is because if you look at digital payments, right, there we are touching close to billion transactions every month. So our system is already under stress, and this is happening when we don't have digital payment access to the entire population, right? So entire population is not digitized. So imagine a case 10 years from now when everyone is doing digital transactions. How do we create a complementary mechanism or a complementary support system which can withstand all these transaction volumes? So that's where CBDC will be another support mechanism, a complementary mechanism to ensure digital payments do not fail; they happen in real time. Did I answer your question, or do you have any other question on that?
Yes, sir. Yes, I answered.
Okay, thank you.
Thank you, Mr.
Any other
Sharath.
question?
There are questions. I think we'll take one last question. Just one more.
Great. Yeah.
Yeah, good morning, sir. So,
Good morning.
as we have recently seen, the government is really putting a lot of regulations on crypto transactions and even the people holding crypto assets. So this is in a way hindering people from actually holding crypto assets and performing transactions in DeFi or any global transactions for that scale. So now CBDC they are putting in as a way so that they can control and track the finances of the country, and then maybe what you said as well, like it can put banks in check, but at the same time the government has superior control over all the transactions right now. So how do you really think the crypto world is going to change because of these? Because it's moving away a lot from decentralization.
Right. So I would say decentralization is a myth. There's nothing called complete decentralization. Not even the so-called public blockchains, they're not completely decentralized. Now, when it comes to the crypto regulation piece, right? So if you look at one of the, or maybe I think in one of the conferences, the finance minister has said that crypto regulation is going to be a priority for India, because India is going to take over G20 presidency in December, and the presidency will continue for another 1 year. So I think till November 2023 we have the G20 presidency. So now G20 is a group of 20 leading nations in the world, and India will be taking over the presidency. I think this is a great opportunity for us to shape regulation with respect to digital assets. And there has been a wider acceptance or acknowledgement even from people in the government that no one country can regulate that. There has to be a collaborative approach. And bodies like IMF, Financial Stability Board, OECD, everyone is working towards how they can create a very inclusive or very overreaching regulation so that there's no regulatory arbitrage between one country with the other. So regulations will happen. Regulators can't dismiss digital assets. The speculative part is going to be nipped in the bud or controlled very heavily. So right now, as we speak, there's a Singapore FinTech Festival which is happening. I think this will conclude today itself. So the Monetary Authority of Singapore MD, he said that he has a very good mission statement. He says no to crypto asset speculation, but yes to digital asset innovation. So what he means by digital asset innovation is that how can you use distributed ledger technology or cryptography or zero knowledge proof to tokenize any asset, tangible or intangible, and unlock its liquidity, right? Because at the end of the day, even the central bank digital currency is going to be another form of programmable money or token at the end of the day, right? Did I answer your question or did I confuse you? I was just wondering.
Yes, he's saying yes. Thank you so much, Mr. Sharath, for joining us from Bangalore and also sharing this wealth of information and knowledge that you have. Your expertise in the area is quite evident in the answers that you're giving to the questions. Very, lots of thanks for joining us today. We are very grateful to you. Thank you so much.
Yeah, it was a pleasure talking to the students. Thank you.
Now, I would like to introduce you to our next expert, Ms. Natasha, a firm believer of the culture to fail often, fail well. Ms. Natasha is the co-founder of Kaleidofin, which is focused on building technology and solutions to make financial services inclusive, especially for the informal sector and the unbanked. Ms. Natasha intensely focuses on making finance accessible and intuitive to end users. She is also the co-founder of Pinpoint System, an Android-based in-vehicle navigation and traffic analytics system. Ma'am has pursued bachelor's in computer science and master's degree in economics from Stanford University. She has worked with Fortune 100 companies like Microsoft and Google in the US, leading strong engineering teams. After relocating to India, Ms. Natasha led engineering team at Bank Bazaar, creating cutting-edge products for this leading fintech. I request ma'am to come on the dais and share her thoughts.
Thank you so much. And thank you for Nirman for having me here today. Whenever you pull up the slides is fine. I'm taking a slightly different approach, partly because, you know, folks like Arjun and Sharath have done such a great job of laying out what is fintech and really breaking it down, which I think is so important. But I think equally important are our personal stories, I feel, and a little bit about the journey. Being an entrepreneur is tough at times. And I think I just wanted to spend a few minutes on that before I jump into some of the problems that I've really enjoyed solving. So, you know, I think first off, right, I think explore, right? Explore a lot. I think don't hesitate to take a path that others don't. I think for me personally, you know, and maybe I'll just talk about three stories, right, of my life. One of the places where I really faced this was when I was 15. I had just finished my 10th and I got an option to move to the US for boarding school for my 11th and 12th. And it was a very different path from any of my peers, right? Everyone, you know, I was a good student. I was heads down. I would have done well. I would have gotten into a good college and I was on that path. And suddenly I was faced with this decision, right? Do I just get up and go to this, you know, tiny 150-person boarding school? What will that mean? Will I be able to pursue things? What does that mean for my overall life? And I jumped into it, right? And I think that was, for me, one of the best decisions I made in my life, right? Because I just realized that I use that and I push that opportunity to explore a lot. And all the way from, what areas did I want to build expertise in, right? I was very keen on math and science, grew up in a family which emphasized engineering, but I got there and I explored lots of other things, right? Everything from art and animation and anthropology to math and computer science and chemical engineering and just a whole host of different options. And I think then came to the point where I felt like I discovered a few things, right? I discovered that I really enjoyed computer science. I enjoyed the problems that economics presented. And I really enjoyed problems of scale, which required developmental changes. I realized that also because I did more things like travel to India in my summer, work here in various NGOs, side by side with doing my various academic pursuits, right? So I think it shaped me a lot. And I think those explorations shaped me. And that's something I would really encourage everyone to do. I think the other thing I would say, and my sort of second story, right, is that it's okay to fail. Um, so I went on from college. I worked at Microsoft. I worked at Google. I had some fantastic mentors, people I learned a lot from. I grew. I was doing very well, and we suddenly decided, my husband and I, to move to India. We wanted to be closer to family. We wanted to take that call, and I decided to start my own startup. Right, and I started a company called Pinpoint Systems. Now, first off, I will be honest here, right? That startup failed. And but what I learned from that was, I think, equivalent or greater than what I learned through my other opportunities, right? I learned that team is so important, right? So when you're on an entrepreneurial journey, right? When you're in a large organization, you have a lot of support by definition around you. But when you're on a journey on your own, find the people around you who complement your skills, right? Find the people who you can brainstorm with, but who will also challenge you, right? And I think that really sets you up for success. And I think, just very basic but important. And I think if I had gone into that startup with a co-founder, I think it might have gone differently. Uh, Execution in a startup, in an entrepreneurial setup, is everything. They do not kid around when they say it's 1% about the idea and 99% about the execution. There is so much hard work to do. There are so many failures around the way. See how you will pivot. See how you will react. See how you will adapt. And on a day-to-day basis, there's a real grind, right? So you have to find what is the extra in your ordinary days, right? That's what really makes things extraordinary when you've taken that a year down, 2 years down, 3 years down. So, celebrate. Like, I remember celebrating my first hire, right? The first cut at our data model that actually predicted things from telematic data, right? Our first time that we installed our POC device in a car and had it working, right? Super exciting, even though that failed. So I think just learn to really fail fast, fail often, but learn from it and apply those learnings in your next iteration or in your next company. I think the third thing and third story is really find your passion. So I think, for me, I think I will be honest, I've been very passionate about each of my opportunities. But I would say that combination of really applying my technology background and learning how to build good, strong products to what I mentioned earlier, right? Really problems that have developmental impact really came together for me at Kaleidofin. I had worked in excellent companies, even from Bank Bazaar. I had learned so much on how to take a startup from, 0 to 1, 1 to 10. These are really different ways in which you run a company. But when I met the founders of Kaleidofin, I think I really felt a mission connect. And I think that's something maybe I wanted to talk through because while you have a bit of a background now, right, on FinTech, on the different pieces as Arjun put together in how FinTech breaks up, you also have an interesting set of things around crypto. I just wanted to talk about other opportunities, right, which also are fintech opportunities. So, we focus on the informal sector segment. Now, forgetting Kaleidofin for a minute, I think the segment itself is a huge opportunity, right? If you look at India, the total population. We have a formal segment, people who access formal finance, which is only around 120 million people. We have people with, smartphones, which is right around, 500 million, maybe a bit higher now. But we've got a total population of 1.3 plus billion people. Now, the informal sector here really falls in the middle here, right? It's highlighted here at 800 million people. If you look, that gap between 120 million and 800 million is massive. That's your opportunity, right? That's where you can really bring in a lot more formal finance. If you could flip to the next slide. There's a lot of problems also, right, to solve here. And just to present these, right, a little bit, I think there are problems on the customer side, first of all, right? You've got a little bit of poor product design from what the customer really needs. Right? These customers are remote. They're sitting either in remote, physically remote areas, in rural areas where they don't have easy access. They're also digitally remote. Somebody could be right here in Chennai, right in the center of Mumbai or Bangalore, and still be quite remote because in their friend and family circle, people have only you ever saved in gold and chit funds. They've never used a smartphone. They may own a smartphone, but they may not be comfortable doing a financial transaction on it. So now, how do you make that customer, use financial products, actually utilize what fintech brings them? There's also supplier apathy. If you look at what a lot of financial providers bring to the plate, right? 120 million is actually bigger than most countries. So a lot of the focus of banks or even leading fintechs in India today is really focused on immediately people who have smartphones, who can use the latest, like a Paytm, like a Grow. And there is fantastic growth there. There are fantastic opportunities there. But now, how do you take those same products and take them to that next, 6 to 700 million people and really bring them to that? How do you improve the experience for that customer, right? Who may not be as comfortable in the same way, right? Maybe they need somebody human to introduce them first, make them comfortable with it, and then move to utilizing it on their own, right? How do you think in a different way to automate and simplify those tech and touch kind of approaches? And there's a lot of very interesting innovation here you can do with voice, with video, with automated interactions, with combining distribution networks on the ground today. A lot of microfinance companies, NBFCs across India, how do you help them bring this to their customers too? So there are many, many different ways you can do this. I think, actually, if you could flip back, lack of access to credit, Arjun talked about this, but again, super, super, super important, right? I think the gap here is incredible. I think microfinance loans are doing a lot for this segment, but they're relatively inflexible compared to what a customer needs, right? So you can get access to, say, rupees 40 to 50,000 rupee loan for 3 years. But what if you're building a small business and now you need access to a 1 lakh rupee loan? How do you really present your credit history, which is non-existent, right? These people don't have CIBIL history. They don't have a great track record of having loans from a financial institution. So how do you underwrite a customer and give them a credit score, which is based on other data? And that's really an interesting problem. Again, you can bring a lot of those same techniques of machine learning, AI, which excites so many of us, but apply it to a different segment. And you'll be surprised, the quantity of data here is huge. So it's very much a big data problem. But the question is, how do you really apply, how do all of us apply our minds to those kind of problems as well? Also, I think, how do you innovate on the products themselves, right? A lot of the informal products today are very, very problematic for the customer. If you see the kind of interest rates that customers have to pay back, it's not surprising when they're asked to pay back, 5 to 10% per month. And they don't even realize they present it in such a intuitive way to the customer. They're like, okay, of course I'll pay this back. But how do you prevent that and create customer protection in the actual products that you build? And that's something also we try to really think about, is how do you create a solution which gives the customer more flexibility? If they have seasonal income, if they have volatile income, right? How do you not have just a basic mutual fund SIP, which just says monthly, savings? But how do you turn that to be super flexible? The months that I have a surplus, I save, I invest. That automatically goes towards my goals, like educating my children or getting my, children married or buying a new two-wheeler. But in the months where I'm struggling, how can I get access to an automatically underwritten emergency loan? Because I may need a 15,000 rupee surplus that I don't have right now. And that's the months where I don't save. So how do you make these solutions super flexible and adaptable to the customer's life? So a lot of interesting customer problems that I think good fintech design can really create the products that these customers need, rather than taking the products which we all use and just saying, now use these. Right. So I think, I think it'd be great to think about those evolutions. I think there's also a problem on the provider side in finance, right? So when I say provider here, I mean the banks, I mean the NBFCs, right? The fact of the matter is they also want to reach the 1.3 billion people, right? They also want the larger addressable market. Everybody wants to help and access these customers. But credit assessment is difficult. I mentioned this a little bit. No, when you don't have somebody who's getting a regularized income, there's not a standardized data which shows you what their monthly income is. So now what are your alternate data sources that you can really leverage and bring into that same kind of, credit scoring or modeling without making it expensive? And traditionally in India, alternate credit assessment has meant a person going out there, physically observing the customer's house, their business. How do you, really think about innovations that automate those things, really bring that data out so that it's not as expensive, again, to solve that same problem for the provider? I think they also have less expertise in, informal sector lending. All banks have a priority sector lending requirement though, and it's as high as 40%. So the great thing here is that the regulator are really keen to solve this problem. There is a lot of push in the market to actually reach this customer. And I think, therefore, there's a really significant opportunity here to innovate, um, of course, while keeping customer protection in mind. So I'll talk a little bit, right, about what we've done. But I think, again, do think of this as problems that are also the fintech problems for financial inclusion, because we've heard about other parts of fintech problems. So what we've done is we've really tried to say, on the customer side, how do we really simplify this and bring them one-stop solutions? How do we do a really simplified account, which also gives loans when you need and helps you meet your real life goals when you need? But some of the places we've really pushed is in assistance. So in our world, the customer can come digitally via their smartphone, but they can also, and in fact, many more of our customers come with assistance. What do I mean by that? There's an agent for whom we're actually building the technology, who then brings the customer on board. And then we take the customer through a gradual journey via, either interactive voice or video or WhatsApp or, calls, where we slowly bring them into the fold, guide them into how to adopt technology. Again, a lot of interesting, experiments we've done there on what works for customers. How do we also similarly, right, incentivize better payments? So payments is a very booming space in India, right? UPI is doing amazingly well and growing fantastically. Again, how do you make this customer, right, between that 120 million and that 800 million number, use UPI more? How do you simplify it for them? Because today, if you think about it, it still requires a smartphone to set up a UPI handle, requires a debit card to be able to set that up. And I think the great thing again is that the regulators are actually listening to feedback from us. So again, I think wanted to just mention a couple of examples. RBI Innovation Hub, which was mentioned by a couple of the earlier speakers, is very responsive to feedback. So they have looked at, for example, the account aggregator world, which gives a lot of data access with customer consent. They're actually bringing assistance into that world. So even a customer without a smartphone can do it. Similarly, for UPI, they've, the industry has enabled UPI enablement with Aadhaar instead of debit card. Why? Because debit card penetration is lower in India and Aadhaar is much more universally available. So I think, again, I think innovation in fintech also often requires advocacy and pushing, for championing your customer, right? And I think coming back to it, I think always put your customer at the center, focus on your customer and whatever problem you're solving, and really, then champion them, whether that means building the best tech, whether that means going out in different distribution models, or whether it means going and advocating changes for them with a regulator. You'll have to do it all, depending on which area you're in. If you could. I think we can, so few things, right? Just to give you an idea of the scale, right? That even with this customer segment and the challenges, we've been able to reach about 1.5 million transacting customers. We've been able, that Kai Cash product is with 30,000 actively paying customers. But what's wonderful is that out of that 30,000, right, over 15,000 of them over time, and this technique of bringing them into the digital fold, now have the app installed and are slowly starting to use this on smartphones, either themselves or in the household. So I just wanted to say a startup journey is all about the small steps, the basic, step-by-step evolution, and this takes time. So we've also faced that journey and we have a long journey ahead of us as well. A little bit of a step back, right? Again, to say it's a huge space. FinTech, right? And FinTech in India as well, but FinTech across the world, right? And I think just to give you some very interesting numbers, right? Almost $10 billion in funding in 2021, 3x of the previous year. We've had massive growth in venture capital funding for this area. Year on year, I think over 50%. There's 20 plus unicorns in India, 30 plus unicorns about to turn unicorns, there's a lot of hope for even, we look to this. I know a lot of US students will look to this, right? There's a lot of companies now going IPO and really growing towards those. So I think it really takes that execution focus. But once you commit to a problem, really spend time on it. Arjun already talked, to the different opportunities, right? There's payments, there's lending, there's insurance, there's neo-banking, there's personal finance, right? There's SaaS itself. You can create the backend SaaS product for many other organizations to use. And that scales up FinTech too, right? If you look at a company called M2P, based in Chennai, doing some fantastic stuff, right? To really scale up, how do you build these backends? So there's a lot of interesting problems to solve. All I would say is, think about what problem excites you, right? What's your mission? What's your customer who excites you? I would say a few more things that, again, we think about a lot. There's a lot of fantastic account ownership numbers in India, right? But again, when you look at it from a true usage point of view, right? I think almost 35% of those bank accounts are today inactive, right? About 35% of people make payments, receive payments into their accounts comfortably because that's easier. But only about 12% know how to make payments, digital payments, I mean. So that really shows you like the understanding gap or the comfort gap in digitally transacting. And that's something we really need to, solve in the products that we build. Mobile internet growth is booming, as I mentioned earlier, right? Some fantastic numbers around internet connections, growing smartphone adoption, growing household adoption is at its highest level and is going to be hopefully close to 800 million in another 5 years. But if you look at it, right, so the fantastic thing we look at is that there's about 300 million plus in rural India who use smartphones today. But the flip side of it is only about 13% of them have done any digital transaction on it. And when I say digital transaction, anything. It could be one UPI payment, it could be one purchase on Amazon. The number of financial transactions is much lower than that even. So again, just these numbers are useful to realizing that there is a problem to solve also in making this super simple and intuitive for the customer. We've got lots of good setup of infrastructure. How do we now solve the true financial inclusion problem? Again, with financial inclusion, new numbers, and this is from global FinTech data run by World Bank just literally last year, right? They just came out with this. You guys should go look at the numbers. Only about 1 in 3 people have access to formal credit. The rest go to their friends and family for credit in India, right? Till today. Women are even 14% less likely than others. So again, how do we make that solve it? And I think tech and FinTech can really solve this, right? Because we can provide the kind of data that a human being going to an underwriter customer really can't. So I think I'll wrap it up there with, I just wanted to mention some of the stats because on the one hand, I think the scale that you guys can solve for is amazing. I think on the other hand, recognizing the kind of challenges and problems is equally important to decide which opportunities you want to focus on. So good luck with the journey, and happy to discuss with any of you any questions. Yeah, thanks.
Thank you, ma'am, for your wonderful insights. The current technological structure in India was meticulously analyzed and broken down into problems, and the solution KeyCash can provide to overcome the difficulties. Your words shall always guide our budding entrepreneurs in their hour of need. Next up, I would like to brief you about our expert, Mr. Pradeep Kumar. Mr. Pradeep is a Chevening Fellow at the University of Oxford. He has in-depth experience in innovation and open innovation and has worked across diverse functions and industries. He is the author of 3 best-selling non-fiction books in Tamil and co-founded a startup, Cycle Gap, to sell Tamil e-books. He has a passion for teaching and has delivered training programs to corporations and campuses, covering more than 10,000 students. Mr. Pradeep holds a Bachelor of Technology in Electronics and Communication from Weller Institute of Technology and MBA from Asian Institute of Management. Sir holds a patent on payment transaction used in augmented reality device. He is currently PayPal head of strategic initiatives and has been the head of ecosystem and outreach for PayPal. He has also worked as a consultant for IdeaSpace, a multi-sector early stage startup incubator based in the Philippines with a 12.5 million USD fund. I request sir to come on the dais and share his thoughts for the session.
First and foremost, thanks a lot for inviting me and thanks for having me. And I should really thank the volunteers and the organizing team for a phenomenal, fabulous job, like be it logistics, invitation and all that, right? So really, really thanks a lot, one. And first disclaimer is like I'm no more associated with PayPal, so not with PayPal. That's the second or the first disclaimer. Right? Then it's a tough fact to be at the last, right? Because everyone wants to go home or like, when is this guy going to wrap up, right? And now it's also much more difficult because have you been in the group bio voice? Like, where you 3 people sit and the faculty asks only one question and you all have to answer the same question, right? And the last, if you're at the end of the last, which means all the other 2 persons have said like whatsoever that you have said, and now you really have to scratch your head to answer something new, right? That's the most challenging part. And like, let me try to differentiating part, right? So I'm going to quote most of the things that they have said, right? So please bear with me. And I also hope that you also bear with me for it. But it's going to be a little bit, I'll try my level best to differentiate on that. Right. Like, as Arjun was mentioning, right? Like, this FinTech multiverse is a bigger challenge, right? Like, what is really, but in my head, right? Like, I just wanted to kind of expand it a little bit more than the other thing, right? Like first you kind of earn money. That's the first part. But as soon as you earn money, you kind of do the savings and then you do kind of make investments for the future. And you like, for any unforeseen risk, you kind of take an insurance, right? Like, investments and insurance are 2 different things. That's the saving for the short-term stuff. And again, savings and investments are also 2 different things. And you pay for your rent, pay for your food and all that stuff. And sometimes you really, whatever that you earn is not good enough. Either like, that's not good enough or sometimes an unforeseen circumstance comes. So people borrow, people as well as companies, everyone borrows, right? Even Elon Musk has to borrow a lot to buy Twitter. He has to like, pay interest of $1 billion every year. So even Elon Musk has to borrow. So then, like, sometimes, like, I want to call it ATM, like all things money, not the automated teller machine or the other ATM in the networking, but all things money is the way that how we look at the fintech multiverse, right? Like, so anything you could fit into any of this one bucket or one universe, depending on how you want to do that, right? So then the next thing is, right, like, why is this fintech is a little bit of a challenging stuff, right? Like, like, let's say that, like, I'm just taking it in 100 rupees. It's not that you buy something for 100 rupees on an online space, right? Like, again, you can look at it like a card present transaction where you swipe, or card not present where you do something in online where you still take the card, but you don't actually physically pay the card, right? So for example, if you buy something, the website takes, like, let's say that the 2% MDR is the merchant discount rate. So, like, it's not like, you give the cash, the entire cash goes to it. Someone is orchestrating it, right? Like, because you will have a different card, the merchant will have a different bank, and then there is Visa, MasterCard, RuPay. So there are, like, 3 players who are kind of into it in addition to you and then the website, right? So if there is a 2% MDR, right? Like, if you take someone like an Amex, they charge a higher MDR, but normally, let's say that on an average, it's 2%, right? In UPI, it is 0, depending on the government says if it is 2000, don't charge anything and stuff like that, right? So the website gets only 98. And then, like, the issuer gets 1.25, like that's a person who would have given you the card and stuff like that. Then the network, then the acquirer takes, like, 0.25. So which means, let's say that if you're a payment gateway who's orchestrating that, all of these things, right, you only get 0.25 and 0.35, right? Like, let's say that if you're a Razorpay or a Stripe, or if a payment gateway, right, that's all, like, or a payment service provider, that's all they make, right? Like, so you did a transaction for 100 rupees, you facilitated, but at the end of the day, you only make 0.25 or 0.35, right? And this is your top line, right? So I know that this is IIT, and I'm very sure that you would make it much more faster in the head. So if you want to have 1 million USD as your top line, right, this is your revenue. And only out of this 1 million, you're going to pay the salaries, the high salaries that you, whatever that you imagine that you want to be, and then pay for your office lunch and snacks and all that stuff. Then the server costs for AWS or Azure or Google, whatever that it is, right? So just, like, if you think about it, like, you, which means until unless you process a hell lot of money, you will not make $1 million. And even in this $1 million, you have to spend all these things, and only then you will make this net profit, right? I just took payments as one particular industry in that multiple universes, right? So you take up multiple other sectors, like, be it insurance or lending and all that stuff, it is going to be still difficult, right? If you want to think about lending per se, I do not know what is the FD rate now, like, maybe 6% or 5% and something like that. That's a one deposit. And then the bank lends money using that, right? So which means the housing loan comes close to 8.5 and all that. So that is the differential that normally that goes in to kind of see how much money that the bank could make based on that, right? So if you think about the entire fintech industry in many of the aspects, the margin is very, very kind of a thin, right? Like, so I want you to be aware why the fintech becomes much more challenging, right? Then even in this, like, we did not talk about the risk in terms of, hey, what about the fraud losses that would come in? Multiple losses could occur, right? Like, you would say that I want to return back, so which means there is chargeback, then stolen credit cards, stolen identity, and then, like, people attacking, and then, like, taking the money out. A lot could go wrong as well. So which means that's the losses that you would incur, right? So the point that I'm trying to make is fintech is not that easy as it sounds, or that not that cool as it might look like, because it's very, very challenging for to be a fintech entrepreneur, right? Entrepreneurship is difficult, but being a fintech entrepreneur is much, much more difficult, right? I just want to drive home the point. So what is the deal with the tech, or why is the tech plays into it, right? The same thing the tech plays in any other aspects of any other industry, right? Like, be it transport industry or the food ordering industry, what does the tech does, right? It kind of makes all of these things. Yeah, any business should do these 3 things, right? Like, bring in new customers, but reduce the cost, and then serve the existing customers better. That's the fundamental way of running any business, right? But what the tech makes is it makes it much more easier, or at least that's the Kool-Aid that we all techies have been drinking and forcing others to drink as well, right? We say that, oh, tech makes it life easier, right? The same thing with digital advertising and all that. Oh, digital advertising will tell you how exactly people spend, but not necessarily the digital advertising really helps you to kind of target the users in a better way, right? Like general marketing and general advertisement may or may not, but we have been telling that, like, oh, you could target the user in a much better way. That's what we have been telling. So that's what, like, we think about all the other aspects, but not necessarily it might be true, but that's what we kind of focus on to ensure that the tech is helping them to bring the new customers, reduce the cost, and serve the existing customers much more better, right? So like let's focus on the reducing costs, because now we know that, hey, there are thin margins. Like, there's so much that you could do to kind of bring the revenue, but you should also focus more on the reducing the cost, right? So let's take up one particular example of lending, or like, Arjun's pay of like, hey, the person borrowing 100 rupees, right? Hey, you borrow 100 rupees and then in the evening giving you 10, it's like, very high interest rate, right? Like, think about like, if you do it for monthly and then yearly, that's a phenomenal interest rate, right? But now, like, let's flip out and then say that, like, you're the person who is lending it, right? And if you take up one customer, right? I'm not justifying it, or I'm not saying that it is fair, but think about it from this particular person's view, right? He gives 100 rupees and then gets how much he gets it back? 10 rupees every other day, right? But think about it. One, the person should know that, like, say, for example, hey, this person is the lender and then he has to get the money. Of course, in reality, everyone knows who is the money lender, right? But on a realistic note, like in a practical world, people should know that you're lending money, right? That is one. And think about it. You have to give the 100 rupees. And to give the 100 rupees, you have to figure out, hey, can I give this person 100 or not? Like, can this person pay it back to me or not pay it back at all? So if the person doesn't pay back, then again 100 rupees goes for a toss. And if the person can give only 101 or 105, then again it becomes a challenge, right? So how is that this person will realize or kind of recognize or make an estimated guess or an judgmental call that, hey, I can give this 100% and this person will be able to get 10 rupees, right? Then not only that, in the morning you have to go give the person 100 so that, like, they borrow, like, whatever that they have to kind of buy it to run their idli shop, right? And in the evening you have to go back and then collect the per, like 110. So which means, think about it, the person should know, right? Like, hey, this person is lending the money. Then you have to go and then actually kind of make a judgmental call, then give the 100 rupees, then again go back in the evening and then ensure that, like, you're collecting this 110. That's the whole thing, right? And then you have to do it in terms of acquisition, distribution, and then you have to do it for multiple people. Only then it becomes much more profitable, right? So it becomes very, very essential to kind of reduce the cost. And think about it, it's all for the 10 rupees, right? Like, even if you extrapolate it even for like normal interest rates and in a regular interest rate, that is a challenge that the banks face, or even the payment companies, or you take up any universe that we saw in the much more earlier world, it becomes much more difficult, right? But just in case of the lending itself, if it is much more challenging, of course, tech plays a lot more role, and that's exactly what Arjun was also kind of alluding, right? Think about, let's say that this particular person puts an QR code out over there, and then all the transaction for it happens through the tech, right? So which means you're not kind of relying on the word of mouth. That person says, hey, this is the business that I do day in, day out. You will be able to kind of go take a look at their bank statement, because every money goes through the UPI and through the bank statement, right? So we know how many customers came into that shop. Like, you can do it for weekly, monthly, and all that. You can run the analytics and then say that, hey, this is what the business that happens, and this is the average customer value and stuff like that. And not only that, like, you could also set up the mandates so that whenever the person pays back, for sure that, like, the 110 hits the bank, you could always pull back the 110, right? So which means making the decision becomes much more easier, and then even the collecting their money becomes much more easier, right? So that's what tech does, like, at least in the lending space. You could always do the same stuff in all the places, right? Like, people say that some of the government banks are very bad, and, like, the service is not good, but you won't believe that even with SBI, you can open a bank account online just even without going to the branch, right? Like, KYC does, like, you just upload few things and someone comes on the video and then they check out you're the person and then make it happen. So think of any of these things, tech is making it happen, but still it doesn't mean that, like, all the problems are not solved, right? And I just want to talk more in detail about the challenges, right? Like, not just take the link, but what are the common challenges that they face, right? And what they talk about when they talk about challenges, the other side of the coin is it is also the opportunities, right? But this is the bigger challenge, right? Like, in fintech, right? Like, we spoke about the fraud on the risk and all that stuff, right? I'm very sure that every other day you hear people click at some link, like, and then, like, they lose money and all that stuff, right? It is the same thing in multiple places. There are multiple kind of risks and the losses and the frauds, right? And you really, 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 really have to ensure that, like, your entire system or your entire operating mechanism is completely safe, right? This is much more important than in many other places, right? Like, say, for example, even if you take up like something like an Uber or Ola, even there are security concerns and then privacy issues comes to it, right? But whereas when coming to money, it is much more different and it is on a larger scale, right? Like, because think about it something like this, right? Like, even if you lose 5 rupees, right? It doesn't matter whether you get 50 rupees later at some point of a time or not. You'll always worry about 5 rupees, right? And here you can't afford to make one small mistake as well, right? You make one small mistake, or people lose money, that is a bigger problem as well, right? And the scale that you operate in also makes it much more difficult, right? Let's say that you're processing huge volumes, and again, you can't afford to make any single mistake. And then even if you take up the earlier payment thing that we spoke about, there are multiple stakeholders and then multiple players. And in all the places, the data should again be much more consistent, right? So I'm just calling this as a whole lot of things, but you can consider multiple risks and then multiple security challenges, right? Like cyber security, data security, and then information security. Add all the adjectives towards the security and then the risks, and you as a kind of financial institution, you have to manage this, right? And if you are somebody who can help the financial institutions to manage that, that is another big place to kind of do that, right? And this is regulation, right? Again, fintech becomes much more unique and much more special when compared to multiple other industries, right? Let's say that the food, again, take up a restaurant industry, something goes wrong, you really do not hold the government responsible, right? You might be angry with the guy who's giving you the food, or you might angry with the restaurant, but normally we don't kind of go and then tell the government, hey, what is it that you are doing something wrong? So think about multiple chit fund scams or the microfinance, meltdown that would have happened earlier, and all that thing. This is something that even Sharath was mentioning, right? If something goes wrong with something, who is kind of responsible? And here, navigating the regulatory challenges alone itself is a very, very big challenge, right? And one quick word of caution that I would also say is, whenever you are thinking about business models, it is easy to come up with new innovation models or a business models where you think that you have a regulatory arbitrage, right? So when we talk about regulatory arbitrage, how do I kind of explain that? Like, again, let me take this transport industry, right? I'm sure, are you using this Uber Moto kind of a thing, right? And when an Uber Moto guy comes, you actually kind of see it with the whiteboard, right? You understand the difference between the whiteboard and then the yellow board. So can whiteboard person use this for a commercial purposes? No. But is there a regulatory arbitrage, or there is something to do with some probable gray area with the regulation? Probably yes, right? So you can kind of get away with the regulation, ideally no, but most of the times you could operate in many other places in terms of this kind of a regulatory gray area, right? Even Airbnb is a kind of a challenge, right? It is your home, and is it your home or is it your hotel? Basically, you're renting out your home. In multiple places, Airbnb works with the regulator, and it is kind of okay, right? But whereas when it comes to the finance, because again, it's hard-earned money, right? Be it 1 rupee or 10 rupee, you're always worried about money. So the regulation plays a much more critical role, right? You can't even come and then say that, buy the stock just like that. And if you're not an SEBI authorized person who will come and then say that, who go buy the stock, then you're actually kind of liable to do it, because you can't give financial advices to people when you're not qualified to do it and when you're not registered with SEBI and stuff like that, right? So, which means regulation plays a critical role in all of this aspect. So if you're an entrepreneur, you have to think about it what am I being compliant with it? You do anything funny, you do anything fancy, it is not going to last long for a while, right? You can check out few of the buy now pay later people or any of the lending players who tried different innovation models. RBI sends one circular, no matter how much money you have raised, everything goes up in the air or whatnot, right? So please be cautious about regulation. The other way to look at it is, there are multiple regulations that you have to kind of follow, right? Where does your data sit, and is the data kind of good enough? And if you can kind of be a regtech player to ensure that all these fintech players can comply with the rules and regulations of the arcane things that you can do it. And then if you can make tech to make it happen, then again, that is a kind of a good place to operate in, right? That's a challenge and the opportunity thing that I'm talking about. Then the trust and security, it matters a lot more again, right? So it goes back to the other thing that I was mentioning, what happens to losing the money part, right? Again, take restaurant industry and food industry. You order chicken biryani, veg biryani comes, you will be mad. You order veg chicken comes, again, you mad, right? Let's say that you're sending 1,000 rupees to someone and only 100 reaches them, right? Only 10 kind of goes off, then again goes back, right? And if you think that you're probably losing money with certain companies, right? And then again, you will think that you send money, then the money never comes or the money never reaches. So you're there and then you're trying to send through UBA, the money never goes. You don't trust that app to make the transaction all over again, right? Because the merchant says, hey, it never comes. If it had come, it would have come, but the money is sitting there. And let's say that sometimes you're trying to raise a dispute and then you're trying to get back the money. And again, if you don't get back the money, you lose trust, right? So more especially again, like, think about this, fintech is all about money, and it is all about trust, and it is all about the security part. If there is no trust and if you can't do the security, then everything goes for a toss, right? Like, even I'm not sure you've heard of this bank runs and all that. It's like more to do with the psychology of the people, and then are you happy with it or not? If you think that you're losing money, or if the bank will not exist, you'll go and then start hitting the bank to say that, to make the withdrawal, right? Not always the bank has the money. If you think that, hey, the bank has money, and then if you trust them, then you leave the money with them, right? So that the money goes around, does a lot of things, and then comes back. So the most important thing when it comes to anything, if you're running a company, again, the trust and security. So if you're again doing something to help people with to do with the trust and security, right? That's why, like, Arjun was talking also about the infrastructure, the consent layer, the KYC, and then the identity, because identity really matters. And then doing the KYC also helps a lot, right? Like, are you who you are to claiming to be, right? Like, who are you? And then are you the same person who are claiming to be? If you can help with all of those things, and again, you would kind of good, right? So now let's kind of go ahead with the opportunities as well. Oh, this is another big challenge. Any quick thoughts on what is this big challenge that we are talking about in the fintech? Quick guesses? Yeah, the more you answer it quicker, we will move faster. Like in general, right? Like tech itself is a bigger challenge in the fintech, right? Like, one day you will say that, like, go with microservices. The next day you'll come and then say that, oh, microservices, it really wouldn't work out. It is much more better not to have microservices. Today you'll come and then say, oh, Python is dead. Like, we have to move towards some other, we have to rewrite from PHP to Node.js and all that stuff. Then tomorrow somebody will come and then say, no, 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 this is not going to work out. Then of course, AI is overrated, ML is overrated, and whatnot, right? Like, I've seen some people would come and then say that, oh, I need to use AI. Like, what is your customer base? They would have some customer base which you could do it with the Excel itself, right? So the bigger challenge in fintech, in my opinion, is the tech itself, because you do not know which tech stack to use, and then should you even use tech or not in the first instance, right? So if you can again help people to kind of navigate this tech landscape with the fintech, again, that really helps, and then it is a particular, again, a good opportunity to kind of be there and what there, right? Like, if you again, just to be very clear, hey, how exactly we could kind of deep dive on the opportunities. Like, this seems very counterintuitive, right? And this is again another generic lesson that I really, really want to kind of take home, because people will think that, hey, this industry is done and dusted, right? So whenever I tell people payments, people say that, no, payments, everything that has been commoditized, right? What is there to be left over, right? If you really people had thought about it, or good entrepreneurs had thought about it, then we wouldn't have the new wave of innovation, right? PayPal has been there since 2000 and all that stuff, right? And PayPal has done a lot of things. If people had thought that, like, everything to be done with payments has been done over there, then we wouldn't have something like Stripe, right? And if Razorpay had thought that, hey, there is Stripe, why do we innovate again? Then we wouldn't have Razorpay, right? Okay, one could argue that, hey, they operate in different geographies. So in different geographies, you might need something. But still, in my opinion, the PayPal to Stripe analogy works out, right? You could see that in the other industries as well. Think about Facebook was the last social media. If you go back sometime in the history of the social media companies, right? Like, and Twitter came much more pretty later. But now the same thing with the Google, right? Even before Google, there was Lycos, Alta Vista, and stuff like that. And now there are people coming back and then saying, after 20 years of Google's run, like, Google is not necessarily the best search engine, because people do search from the other context, right? The same thing with the social media. People are saying Facebook is dead. What is that? Like, even Twitter might be dead. So this is the best time to restart the social media companies as well, right? So one thing is, never ever think that, like, be it might be a saturated industry or an industry, but the industries are always ripe for disruption. It all boils down to, hey, can you actually kind of think about the differentiating factor and then the innovating factor? What is the problem that you have it, right? And in the lending, you all saw much about, we also took a specific case example of lending it to a person for 100 rupees on a day-to-day basis. Think about all the lending that happens across the corporates, B2B lending, like, house loan, vehicle loan, any kind of a loan, the personal loans that you take, all the new age things like, buy now, pay later and all that. Still, like, we also saw the numbers in terms of how big the unaddressable market is, right? So again, like, as Arjun was mentioning, OCN is coming up something called as Open Credit Enablement Network, which would make all this underwriting, KYC in a much more easier manner. And then it would also help to reduce the frauds that would potentially happen, right? Because everybody would have a track of what everything is happening. So it becomes much more easier to borrow, much more easier to authenticate people. And this is the most interesting part that I want to talk about, right? Like, you heard a lot in terms about the Kaleidofin, how they're helping the lower end of the, or the bottom of the pyramid to do it, right? Being savings, insurance, and all that. But this money management is a much more bigger thing, right? Fortunately or unfortunately, what people do is they focus on the top. That is where the money is. But there is much more money to be made from the middle and as well as at the end, right? Like, do people, the best example to look at it is look at our stock market and then how many people do actually participate in the equity market, right? And even if you think about equity market, how many people are buying the bonds per se, right? Like, there is much more money to be made and there is much more to be made. But normally what we do is, or much of the bigger population that they do is they invest in fixed deposits and then the gold, right? But people really don't think about diversification, or they go and then buy a house loan or and invest in real estate. But again, there are better ways to invest in the real estate as well, right? Like, there is something called as REIT. So how do we kind of help people to do the money management in multiple ways, right? Like, I'm again using that as a catch-all phrase for everything else, be it savings, be it could be insurance or like, investments. In multiple ways, how do you kind of help people to do the money management for all kind of a sector? So even if you pick and choose one particular thing, right? Like, it could be ultra rich, or it could be like, Henry's people, high earning but not rich kind of a people, or like, the bottom of the pyramid. No matter how you look at it, there is a huge scope to do it more, especially even in a country like India, or even if you think about the global markets, even that happens, right? And this is the most important part, right? Like, that goes back to it. It really doesn't, and this is where even the tech plays a much more important role. And this is what, like, Natasha was responding to it in the last slide, the financial inclusion, right? This is much, much more important, right? This is not lip service, right? And you can't have a world where exactly like, some people are rich, and like, you can't have this financial disparity, right? And you can't say that like, I'll put tech and, some people have smartphones, some people don't have smartphone. So if you don't have smartphone, you can't do all of these things, right? Like, that cannot be the case. And again, you cannot have this information asymmetry. Some people know about the better ways to do the manage the money, and some people really do not know the better ways to manage the money, right? And how do you kind of educate people on, like, when I talk about financial literacy, it's not only about like, hey, you don't click certain links from the banks, right? Like, do the pan, like, they ask you for information. It's not only about the preventing the loss or preventing the fraud. It also all about, hey, what are all the options that I have, right? So if you have spoken to people who do kind of like, serve the bottom of the pyramid, what happens if you go and then talk to them is most of the times they don't even know or aware of the skills that is being available for the government, right? Can they actually go and then open a zero balance bank account? They do not know that. Like, one, it is being inactive because they think that I can do it without it. They don't even understand that unless you have a good bank account and then a good standing, you'll not be able to get credit, and you will be able to get credit, right? So it is something like, how some people, when they run a company, they kind of show the losses because they don't want to pay the taxes, right? If you're a loss making company, it will be difficult for you to get the loans or to get the credit. So it is important for you to file your taxes very properly. That's what I'm talking about, literacy. This is like, for the middle class and then the lower middle class and stuff like that. And then how do you bring everybody else together, right? So the last one is universal financial health. It doesn't mean that everybody has to be rich and everybody has to be good, but everybody has to have a bare minimum criteria, right? Like, you could be earning only a very small amount, but even within the small amount, are you taking the relevant insurance that would really be helpful for you? Are you saving the amount that you could potentially save? And are you investing that potentially that what you could invest out of it, right? So how do we kind of enable this? So all of, if you can again play in this particular sector, right? Like, again, that would be a great place to be in, right? So that's all I had to share, and I hope I still added more value than whatever that the others were saying. So that's about it. I know I was a little bit rushing fast because we all have to go home, right? So yeah, happy to take questions.
I'm grateful to Mr. Pradeep sir for giving us essential insight. The presentation included everything from the value chain analysis of fintech, the challenges in the value chain, and how every challenge can be an opportunity. Thank you for sharing with us some valuable information, sir. Now we shall start with a Q&A session. We have few questions from Google Forms, but before that, I would like the audience to go ahead with their questions.
Hello, sir. My name is Abhishek. I'm third year civil undergraduate. And my question to you is, in fintech space, there are already so many players because the market is quite lucrative. So if you find a very small niche, how do you capitalize on that niche and make sure that you make a differentiating factor from others?
See, I have a friend slash mentor, one of the discussions he was saying something like this, right? You know, India is filled with smart people, right? And if there is a stone and if no one is sitting on that stone, there is a good reason why people are not sitting on the stone, right? If there is a way to make money, people would have already figured it out and that would have done it in general, right? So going to the niche part, right? So this is how I would look at it, right? You either sell 1,000 people. See, the goal is to make money, or the goal is to kind of solve particular problem, right? That is number one. And in my opinion, sometimes certain problems are not worth solving, and sometimes you will not be able to make money by solving that particular problem, right? You have to be aware of that. But in the niche thing, right? If it is niche, you really have to make good money, right? Let's say that you know. What is the company that Peter Thiel has, right? Like the security company, right? It has only one government as a bigger customer, right? But they make the entire money from that particular customer. So if it is niche, your profit margin has to be much more huge so that you don't go after multiple people and then make money. Either you make 100 rupees from 10 people, or you make the 10 into 100 from one person makes a difference. So if it is niche, it has to be much more lucrative enough for you to make money out of it. If not, I wouldn't do it.
And following that question, if there are certain products in the market and you feel that there is a little bit differentiating factor that you can add in this product, but that is quite essential for the customers.
Yes.
That feature is not too much different from the existing, but that can have a positive impact on their customers. So in that particular scenario, would you like to build on that feature over the existing feature and launch the product?
Unfortunately, I'm an MBA guy, so I'm going to answer it depends.
Okay.
Right?
Yeah, makes sense.
The reason why I say it depends is, right? Like, say, for example, sometime back, Paytm kind of given something the voice, whenever you make a payment, you do not know whether you actually made the payment or not. That is a problem, right? Then they kind of started announcing, hey, this is the thing that it is. It is not much difficult to kind of implement it. And now every player has more or less implemented it, right? So whatever that you bring in, you always have, most of the times, the moat is not strong enough in many of the aspects, right? So either you build a strong moat, if you are a player, it means you offer a much more differentiated one, people cannot replicate it. At least you have a much more good, long enough lead enough time so that you could make good money out of it, or you acquire more customers and stuff like that. And sometimes you become a fast follower, even that really helps, right? So you really know that, okay, the market, there is a need for it. It really makes a much more faster sense as well to it. And it's always okay to do it. And in my opinion, what really makes a big difference is how good is your executional operational thing, right? As again Arjun was mentioning, there is Uber and Ola. I do not know which one do you use. I usually have preference for one particular thing because, again, the customer service, the operational quality makes a big difference. Same thing with Swiggy versus Zomato, or with Amazon versus Flipkart. We usually have our preferences based on our experience with them, or sometimes the ground reality is that some are good and some they really don't match up to that level. Yeah.
Thank you. So we'll be taking one question from Google Form. This is to Mr. Arjun. Recently, in one of the MBA case study, we came to know about your legendary work in the microfinance sector. According to you, how can a firm be profitable while providing financial inclusion to the unbanked, which is not an attractive segment? Of course, we'd like to know opinion of all the speakers.
Sure. Thank you so much. I think, first of all, the fact that, working with the unbanked for it to become, not profitable is not a right statement. I think it is quite, you can make anything profitable by building the right business model, first of all, right? I think that is the fundamental thing. And I think working in microfinance is extremely, I would say, lucrative commercial. I don't think there's any challenge on that. So in fact, there are a lot of banks who are getting into that space right now. So if that is something that people have a thought that working with the poor is not a bankable option, I think the myth has been destroyed. I think at least for the last 20 years, very much. So.
Thank you, sir. We can have a question from audience.
I'll go ahead. My question is for Natasha. It's interesting that you talked about microfinance and the offerings that you have there. I want to ask, I was recently going through an article where it was talking about why microfinance fail. And as Pradeep sir was also talking about, the microfinance meltdown recently happened with a lot of firms. So because there is a huge paradox between whether to be take it up as a social cause to help the downtrodden, or whether to provide a just basically a compassionate capitalism case, right? So how exactly is FinTech going to help with this paradox?
I'll try answering that. And I think maybe also add to what Arjun said. So, and I think your question actually all three of us can probably add to. Um, no, I think it's, first of all, I wanted to also dispel that it's not only compassionate capitalism, right? There are lots of very strong for-profit companies that are working with this segment. So I think it's important to realize that you're not going to be making less money than others. You can build equally profitable businesses. It's just the operating model, business model is different, right? Per customer margin will be lower, which means your volumes have to be higher. And so you have to build a product that can scale better. Now, to answer your question of where can FinTech help, see, microfinance is a very, very effective operating model, right? It's been proven across the world, but it's operationally heavy. In the sense, there's an agent who works with different groups of women usually, and they meet these women, they form this group, and then every month or every 2 weeks or every 1 week, they collect the repayments on a loan. So it's a physically operated model today, largely. Now, FinTech can therefore bring a lot because, as all the speakers have mentioned at some point or the other, one of the key differentiators of the tech is reducing operational costs. So you reduce the cost of that agent having to go. So now imagine if you were able to turn 80% of your microfinance payments from physical to digital. Now suddenly you only have to go for 20% of them. That's a huge potential savings, right? A lot of what microfinance also does is they work with FinTech to cross-sell other products, right? So they're providing loans, but the audience, the customer base has a need for many other things. And so by partnering with other players, they're able to bring actually a win-win. The customer gets an additional product. The microfinance company gets additional revenue because they get paid it's their agents who are going out. And the FinTech also gets a distribution model to reach these customers. So there are many ways in which I would say FinTech can very effectively work with existing operational models, make them better, and also work with them. And then just to add to what you said about profitability in this customer, it's actually, I don't know how many people in this room know, but collection efficiency, which is essentially a metric of how effectively does a customer pay back their loan on time, is much higher actually in the microfinance sector than almost any other lending, especially digital lending. I think the numbers are usually upwards of 96, 97%. And it's not unheard of to have 99% collection efficiency in this world. If you look at the collection efficiency numbers of any digital lender across the world, it'll be way lower than that. So I think there's actually in this customer, I think there's a very natural tendency to trust the provider and also make them trust them, because they know that unless they pay back on time, they will not get the next loan. So it's very critical for them.
Hello, sir. I have a question. So we all know that credit helps the build our economy and steer the financial growth. But however, like if we'll talk about India and Indian market specifically, the consumer debt to overall GDP is not that great. It's in fact one of the lowest in terms of at a global scale. So first question is like why Indian customers are not bound to having more debt on them after all digital lending apps coming in. Borrowing became so easy at this point, but still there's a notion that maybe taking a loan or maybe working on credit might be more riskier. So why is that? I understand saving mentality is one reason, but what could other reason be? First, in structurally or infrastructurally, how our financial systems are placed, and second, how we can help to break this notion and infuse more credit, working on credit mentality for the Indian segment.
Sure. I think first of all, the percentage that we are seeing, right, is all the formal credit. Right? There's surely a bigger chunk of informal credit, and there's also other products which the informal, the bottom of the pyramid uses. We all have heard of these things called chit funds. They are also methodologies which people use for doing savings, for getting loans, for all of these things. So there are multiple mechanisms which are not probably getting covered under the regular regulated entities or the formal financial sector. So the numbers probably higher. It's probably not as low as what typically gets reported. But at the same time, I think that's the same thing that we are all talking about as opportunity, right? I think that's really what we are all trying to say is that here there's a huge opportunity for the people who are there, which are currently, if we can say, financially excluded, unbanked or underbanked, segment. So there is a segment in India which is underbanked, unbanked segment, which is something that we can go for with the latest technologies, create solutions which are going to be differentiated or maybe innovative, and make sure that we can actually boost these numbers, thereby getting people to be able to do more economic activity in a much more leveraged manner, right? Ultimately, what debt enables everyone is that if that guy can typically do so much X amount of business, he can take on a risk to do a much bigger revenue, and therefore his lifestyle improves, right? So that's his leveraging ability goes up. And yes, that's really what we're talking about, and that's something that we should all be focusing to create solutions and products for that market.
My question is for Arjun, sir. So you belong to a chemical engineering background. So I'm a freshman. I have no idea about this. It's not that it's fancy for me. So I'm a bit interested into all this. So how to get into this ecosphere, sir? There are many exams, like you can crack CFA, FRM, or do MBA, but how to minimize that time, get an understanding of everything? Because this is not solving questions. You're not applying. This is not thermodynamics.
Thank you so
this
much.
is real life problem. This is
So-
real life problems. You don't need to get grades out of this. This is real life problem. So how to get the knowledge of everything?
No, I'll tell you actually what really helped me or my move. I mean, I was actually okay in chemical engineering, but I really got very interested in OR. So actually, OR was my stepping stone into getting into the finance side. And OR kind of numbers made it much more easier. And ultimately, finance is all about numbers. And once you get a hang of it, it's only numbers, and it becomes much more. And if you start understanding OR and IE, if you do a course in industry engineering or any of these design courses, all that we're talking about is just process design, right? All these are process design and controls. And these, one of these courses is good enough for you to understand what this is. And just, it doesn't really take too much to learn the basics of finance.
So, but what would you suggest? Like cracking some examinations like
Nahin,
CFA, FRM
nothing here.
to understand the basics, or
Don't do all those things. Nothing. I know you can crack more exams, but that's not the objective here. Yeah, but
thank you, sir.
Good afternoon, sir. My question is, when we say the economy is in recession, like US is having inflation of more than 8% right now, and Q1 and Q2 there is a negative increase in GDP and inverted yield curve there in US right now. So when we say economy is recession, and second question is like what you guys are planning to go through this recession period?
No, like, have you heard about this joke about 100 economists? Like, they never say anything, right? So the quick comment on recession is always very simple, right? You know that you are in recession once, one and only when you're in the middle of the recession or once when it is done, right? Like, it is more like the post action, as the people say it, right? That is one. And the other thing that I would say about it is like, macroeconomic factors is always there. And you really can't do much about it until unless you're a Fed chairman, or sometimes even Fed chairman really cannot do properly, and that's why they're in a bad shape, right? So only one thing that I would recommend for myself as well as for you is ensure that save money, don't get into the debt so that you can't pay your debts at a later point of a time. Save money, and then ensure that you get a good job, ensure that you have good money to pay your bills and stuff like that. That's the only thing that you can worry about I know that's a very narrow, convoluted view, but that's what I would recommend.
No, I just, I think more than chemical engineering, economics was really not my subject. So, but again, I think opportunities that we're talking about, right? We're talking about entrepreneurial opportunities. I think there's still so much opportunities. It doesn't matter whether it is recession or it is going to be, whatever the situation is. I think these opportunities don't disappear. The other thing also is that, I think Indian economy, I've seen microfinance, very closely. It's very disconnected from the global economy. Okay, it does actually not so much of correlation. People said, 2008, this whole, the meltdown is happening. What is happening? Are you guys having zero struggles? The Indian economy keeps going on in the rural areas. You have no clue. It's, this guy basically is selling to the next village. The next village is giving to here. Only connection is with, the petrol prices, which is the biggest, input variable to it. Other than that, all the other things are, connected internally. There's very little that actually affects from a global perspective.
And I will add one thing, and again, example from experience, right? So it's less about recession, but it was more about the pandemic that hit us, right? And we were right at the start of our startup journey. So our customers were actually very affected, right? Suddenly, and we had launched a savings and insurance product on the ground. We hadn't started lending yet. And so we were very affected. Customers didn't have the ability to save anymore. They were really worried. Incomes had really collapsed, right, on the ground because of all the lockdowns. But I think what's interesting in a startup journey, and again, this is going back to being an entrepreneur and being, flexible and adapt. You really need to look at what's the opportunity in that world, right? And it is really, even though it sounds like unnecessary gyan, it is true that in every challenge is an opportunity. So what we observed personally on the ground was that we were already working with many partners to reach these customers. Now, the customers stopped saving, but the partners reached a different kind of challenge. They also had trouble with lending repayments because they were lending loans. So they turned around and they said, look, you guys have built these persona-based recommendation engines to figure out what to guide the customer into saving. Why can't you apply that for lending? Help us identify within our customers who are the more likely to repay, who are less likely. Even though we didn't have pandemic data, we had demonetization data. It was also a shock that similar customers had gone through. And that became an opportunity. So we actually developed a product called Chi-Score purely because of that pandemic. And, we hadn't planned to, but the product idea and the build happened because of the challenge. So I just wanted to say, as an entrepreneur, right, really try hard to look through what is the opportunity in this, challenge, because challenges will always come.
We will love to hear more from our experts and the young entrepreneurs present amidst us. But in the constraint of time, we shall limit the questions. We'll float a Google form for later. Now I would like to call upon Dr. Richa Agarwal, the faculty advisor of Nirman, to deliver vote note of thanks.
So first of all, if you felt that this was a great session and we had, power-packed 4 talks from the 4 experts, give a round of applause. Personally, for me, it was a great time to just sit back and absorb all the information that was coming my way from the finance field. I am a marketer and, I'm a marketing faculty. I've been a marketer earlier. So it was a great opportunity basically to learn and to understand what are the opportunities and how is this space basically organized. So just to, put everything together in the interest of the audience that is here looking for entrepreneurship opportunities, I think I would like to take, the 3 core areas from Mr. Arjun. He said that there is a space for lending money. And then there is a space where you are saving money. And the third is that the transfer of money. So in these three spaces, I think there is a lot of opportunity when we're talking about saving money, safety, grow my money. That is what I want. I just don't want my money to be safe. I want it to grow, and money should earn more money. So that's the opportunity, one of the opportunities in the saving space. When we look at the lending space, I need money when I need it. Means there has to be a speed with which I can get money. Access to money has to be easy. Awareness about what are the options available to me, that has to also go up. And also at the same time, this cost at which I get money has to be extremely low, right? Also, I think from the presentations of other speakers also, there is a need perhaps that I do not feel the pinch of paying back the money. So it should be integrated with the inflow of cash from my business. There are some models who have, there are some businesses who have done this, and they collect the money as the cash flows in from the business, so that the person who has borrowed does not realize that the loan is already slowly getting paid. And that's a wonderful model basically to have. Then we talk about the third space, and that is transfer of money. Again, where I need to transfer, it should happen seamlessly, any corner of the country or the world for that matter, I should be able to send the money within seconds or, nanoseconds. That's the kind of customer expectation that we are talking about. And can technology make it possible? Possibly, yes. But there are challenges associated with this area. And that is, technology can be a facilitator. At the same time, it is still growing, it's still evolving, and therefore there are lots of concerns in terms of safety, in terms of security, in terms of malware attacks, in terms of other people hacking into your system. And that's the space where I feel there's a lot which needs to be done, and that kind of happens to be a neglected area. Also, at the same time, finance is a space where regulation and legal systems, they have a role to play. They also set out the boundary for the tech, the fin entrepreneurs to kind of come up with their solutions, their products and offerings. So for an entrepreneur who's looking at fintech as a space where they want to operate, I think an understanding of finance, even if you're, engineer from chemical engineering with a chemical engineering background, having an understanding of finance, having an understanding of technology, that is important. And from that, let me, move to the second speaker on the dais here, and that is Natasha. She brought up something very interesting, and which is about the entrepreneurs. So you, as an entrepreneur, in fact, as a growing up in India, very often you're pushed by parents that, study, 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 and focus on something, become great at something, and especially number crunching is something very important for your survival in the future. All that is great, but please explore a variety of things, because things later on get connected, and they connect in a beautiful manner. You won't even know how something got connected somewhere, right? So explore your environment, identify and discover your passions, and then work for it. You'll fail, you'll learn in the process, and some of the lessons, as she mentioned herself, they're best learned when you fail. We can't teach you at the best institutes also, right? And coming to Pradeep, here, I think it was like, an express covering all the areas, all the topics. And though it was at a speed, I think he was touching upon all the important points, the challenges, the cost, both these things. And I think he emphasized these 2 points quite a bit, that the cost of operations has to go down. And there are challenges, the legal part, the safety and security, because you lose the trust. And that one slide was very important, trust. Because in finance, trust is so, so, so important. Somebody loses even a small amount of money. That word of mouth, negative word of mouth that will go out, will ensure that nobody else is also using it again. That person is certainly not coming back. Others are also not coming back. So markets, as perhaps if you fail, you can get a re-exam, you miss a quiz, your faculty will give you another quiz, a makeup quiz. But in the market, failures are not, they're judged very harshly. Any mistake you make, it is judged harshly. Of course, it's an opportunity to learn and grow again. But what can be done? There is also an opportunity to learn from other person's mistake. So let me close with this, and my vote of thanks, let it not become too long. There is a lot to thank each of the speakers for. especially taking out their time on a weekend. And Mr. Arjun's family is here, wife and his lovely daughter Shreya. So I know that this is family time, but thank you so much for sharing the family time, and all three of you. So very, very grateful to all of you for making the time and coming here. It has been a wonderful learning, and I'm sure everyone here will agree with me that we had a really nice power-packed session today. Thank you. Thank you all. Thank you to the audience. Thank you to my team. Thank you to the audience. Thank you for your questions. Thank you, my team at Nirman and the volunteers who have joined in today. I think it has helped a lot in putting this all together. We cannot thank you enough for coming and participating. Thank you.
Now, I will request Nandini ma'am, Nirman Program Manager, to give a token of appreciation to Mr. Arjun for this wonderful session. Now, I'll request Sanjay, Nirman Project Management Head, to hand over a token of appreciation to Ms. Natasha for this wonderful session. Now I request Soma Raju from Nirman team to give a token of appreciation to Mr. Pradeep Kumar for this wonderful session. Thank you once again to everyone present over here. Thank you once again to all the speakers.